Hello, everyone. Welcome to the Prosper series. I'm Adriana, your host today, and I support Celo community. So we are here with Prosper as a community to envision, ideate, and create a new world of prosperity for all. And so if you are new to this series, a special welcome to you. And we like to start out by just seeing where everyone's calling from. So if you want to go ahead and write in the chat your city and country, it's helpful to see who's in our virtual room. Hi, David from Colombia, wonderful. And Angelica, I see Juan is here, and Laurence. Elisa from Sao Paulo, beautiful. Jorge, welcome. And as we continue with our presentation, please feel free to ask questions either in the chat or there is an ask a question feature down below that we will be checking periodically throughout the session. And so Prosper began as an in-person retreat in November. This is a group of us that went to the woods of Mendocino, California, developers, designers, dreamers, and doers around this question mission of how to make money beautiful. How can we create prosperity for all? And then we planned on doing another retreat this summer. And then, of course, because of our current global pandemic, we decided to bring this content instead online in a weekly series. And that's what you are connecting with today. So in order to get started, I would love in these sessions, we'd like to introduce some presencing, some meditation to bring us all into a space of prosperity to best receive the content. So if you are feeling comfortable, I invite you to gently close your eyes. And just take this time to tune into the inflow and outflow of your breath. Feeling the breath as it comes in through the nose and following it all the way down to the base of the spine. Feeling where your body is touching the seat below you, that solidity, and breathing into that place of contact. Noticing how support allows for release, allows for spaciousness and movement. Feeling the breath slowing and deepening. And in that spaciousness, we have a greater ability to imagine. We have greater access to our full capacity as the people that we are. So taking another breath here, breathing up into your heart. In the words of Charles Eisenstein, a philosopher who wrote the book Sacred Economics, how beautiful can life be? We hardly dare imagine it. And so this is an opportunity now for us to imagine how beautiful life can be so that together we can change the story and bring that vision to reality. So I invite you to ask this for yourself and notice what images arise, sensations, colors, even smells, allowing all of your sensations to imagine this beautiful world of what it means to you. And then after your next breath, gently opening up the eyes and coming back into the room. And so one way that we can create this beautiful world is to bring prosperity to migrant workers. And so I'm super excited to have Marco Montes Neri with us today, and he's going to be sharing about Saldo. Saldo is a supports migrant workers in making payments to their families. And so I'm super excited to welcome Marco to the screen. So just give me a moment here. All right, and wonderful. Welcome, Marco.
Hi, thanks for having me on.
Absolutely. It's great to have you here. So I'm going to focus your screen, and there we go.
Great. Thank you all for being here. My name is Marco. I'm the co-founder of Saldo MX, which it's a company that we started a few years ago to help transforming the way migrant workers send money back home. And we really created this company around the mission of create a better way for these migrants to really have a better alternative to manage their money. It's crazy that in the last 50 years nothing has changed, and so we started by looking at how Bitcoin works, and we thought that there's massive potential for the money transfer industry to work in a different way, that provides more access to these communities that have been unable to access proper financial services. So a small team that was all of the team members aligned with around the same mission started thinking and looking at how migrant workers like are actually using their money, and what are like the real problems that they have on a day to day. What we really saw in the very beginning is something that it's obvious. Everyone has seen how a migrant worker comes to like a money transfer agent and uses cash. So the question is how in a country like US, a bunch of people, millions of them, still like rely on cash to manage their finances. Especially how can you actually create a kind of prosperity for your family when you cannot track your finance, and you cannot move the money around, and you cannot build credit on top of. And kind of what we saw is that there was something that we were not understanding well, but that the actual goal was not only to provide a better money transfer service, was to rethink the way that the people were actually interacting with their money. And the kind of the goal for the company began to be how we can actually create a better bank for them, instead of just like a cheaper and faster money transfer service. And for a small team of 5 people, it's really hard to think that you can actually bootstrap a bank. I mean, it's complicated and expensive. That's where like we saw in general cryptocurrencies and blockchain is a potential disruptive technology that lowers the barrier for developers and people like us being able to create what it's a next generation bank. So I'm going to tell you how we started, being a small group of people actually solving and part of their problem, and also like opening the doors to be able to interact with them in a closer way, and understand better what they actually needed. So what we did is we tried to understand how money transfer works, and what's kind of the purpose behind every remittance. And actually what we saw is that remittance is not someone sending wealth from one country to another. It's more like a salary. It's more like a something that it's an income that you utilize on a monthly basis to pay services. Typically, people send money back home so that another family member can pay utility bills. And actually, the money is not piling up there. It's more like a cross border wallet we saw was needed. So we created Saldo, which what it does is it cuts the middleman. So we did something different from what other money transfer startups were trying to do. Many companies and many startups a few years ago started just trying to digitizing the traditional remittance. That means if someone sends $300 every month, which is the average transaction, they tried just to do it online, and the problem was massive fraud, and the problem was risk management and obviously fees, because they were relying on different rails. So our kind of approach was different in that regard, and we created Saldo as a very easy way to pay. It's like a bite-sized transactions that were on average $15 and $20. So that dramatically creates a better like cost structure for this same problem, and allows us to operate in a low risk environment and actually grow in the number of actually users, which is the thing that we were most interested in. The app is a simple thing. It's just an interface that brings you companies that are operating in a different country to your hand. It's like something that allows you to just buy credits denominated in dollars or pesos. And from there, you can actually trigger payouts to one of the 25 billers that we created agreements with. So in a way, it solves a problem, and it brings not only like this experience, but also it brings the feeling of control to the one who's actually sending the money. And one of the things that we saw early on was that this model is interesting in many ways. It brings a lot of data around what's going on, because like you can actually map how's this person actually interacting with entities in a different country. So, but you understand that if someone is paying a water bill in a specific municipality in Mexico, I mean that you can assume a bunch of things. And if you see that they pay on a monthly basis and that they never like stop paying or like never like default in this agreement that they have with this company, so you can start assuming things. So the kind of the instead of like the limitation that we started with became more like a strength in the model, in which like we were able to understand better who we were interacting with. We were actually opening the doors for people to do low amount transactions across the border, when other solutions were just like struggling with trying to onboard users and trying to apply traditional KYC and AML procedures to a community that actually was not able to comply with. So again, the banking regulations have prevented a lot of people like this demographic to have good access to technological innovations in the financial space. So instead of like just following like those practices, we found a way to lower the risk, and in the same way and even more efficiently prevent money laundering by just allowing these sort of payments, and from there create kind of a profile for each of the users that internally made us kind of feel comfortable around like what kind of users we were serving without the need of requiring like a lot of personal information that ultimately for this demographic is hard to provide, because the reality is that many of these people are working under a different name or under several names. So the traditional way of understanding who's your customer and knowing your customer, here it becomes like a complicated topic that it's not very easy to fulfill. The results were actually pretty good. We've been growing lately at a very like fast speed, and creating agreements, and also like having incredibly low churn rates. And actually it's something interesting that even during COVID, like the payment volume has been going up, and this is because we are only addressing like these basic payments that the household needs to make on a regular basis, and nothing beyond that. The only kind of thing that we were curious is that we begin with this idea of having like providing better banking services, and we realized that we were only one app of many apps that interact with this community. And actually there are several of them, including like money transfer apps that actually interact with migrant workers' money. So we thought that our approach was kind of good as a proof of concept, but moving forward, we needed to use kind of open infrastructure if we really wanted to serve the customers like in the next few years. And what I mean by that is that you as a person should be able to use your money in an app, but also like take that money and use it in a different app in a secure way. So that's not how the payment infrastructure works now. It's like your bank it's that your only interface to interact with your money, and it's really hard to bring your money elsewhere. So the kind of the great innovation that we see in crypto and now stable coins is that it allows you to bring your money wherever you need it, and in a secure way, without like really forcing the user to only interact with only a single experience. So we started seeing people saving money in our tool in a way. Like they started adding credits denominated in Mexican pesos. So in a way, like we really saw the need of people storing value digitally, to have better mental accounting, and that was provided by the experience that right now Saldo offers. But in a way, we really see this approach as just a tiny bit of a full bunch of financial services that migrant workers actually need for their lives, and to actually have a good life. So we started seeing that it would be great if a money transfer service can actually allow these migrant workers to bring his balance that they have with us, and kind of use it either as a source of payment or as a destination for a money transfer. Because ultimately what we ended up doing is creating like this wallet that sits on the top of Mexican financial infrastructure, and that actually can be seen from anywhere and in any experience. And that evolved into what we now denominate SMX wallet, which it's just a fiat-backed token that it's pegged to the Mexican peso, and it helps our infrastructure to be more open and available to anyone who wants to use it. Being the Saldo MX app kind of the first beneficiary of this, but also allows this wallet to be interoperable with other financial services, just by enabling Mexican peso money transfers. So I think in the crypto space, we're starting to see how Tether and other stablecoins were like the first cases that allow interoperability among different exchanges, and the same thing applies for other currencies in the world that start allowing many applications to use a common currency that they can actually settle with. So in the future, what we are seeing is a different backbone for financial services. Someone can call this central bank digital currencies or stable coins or fiat-backed tokens. I think it's a combination of the three, but what it is, it's a tokenized version of currencies around which several financial services are being built on. So instead of having the PayPal approach that it's like your experience is everything, in the future, the more likely scenario is that many apps will use like a different set of tokens that make more sense for their customers. For example, an app like Saldo MX can use maybe dollars and pesos, or a Bitcoin exchange can actually see value listing more than one. And what it actually does is it allows the one who's building either the wallet or the crypto exchange like less liability, and it's a less lean, it's a more lean model for actually building financial services. And it's very interesting how the user ends up having full control of their assets. So it's actually kind of what we're seeing happening moving forward. For example, in around Celo dollars, that it can actually serve the purpose of really allowing many companies of that have diverse like use cases to really use like the same unit of account that it's easy to interact with and great APIs. But the problem here, it's like how do we bootstrap like this ecosystem of new currencies? And in our case, it's our approach was SMX is a fiat-backed token, which means that it operates in a regulated environment, and it allows us to be connected into the old or legacy financial rail. But that's not the case for algorithmic stablecoins. And what we are right now seeing is that I think this will happen in a couple of ways that I want to talk about in this talk. The first one will be peer-to-peer or over-the-counter markets. If you see LATAM, kind of the access to cryptocurrencies and digital assets has been like not very easy, and regulation has not been like fast enough, and obviously the financial sector, it's actually very tiny and not very competitive. So it's very hard for like a Bitcoin exchange or a crypto exchange to provide the same access as Coinbase would do in the US. So something that we see like really interesting, especially in the early phases of this shift, is to really count on something like local Bitcoins, but that will start using dollars, which is more stable, for providing the first access to these early adopters of these tokens. And you can see the volumes of Chile and Colombia in these graphs, where we see a massive explosion of local Bitcoins, and that means that it's actually the way and primary access for many people to just find someone in a list of ads where they can actually find someone that they can trade their local currency for something like Bitcoin or a stable token like CUSD. So I expect to see more of that. And this is not something we do. It's more like something that we see happening, and actually we see that as a trend that I believe will be important to provide access to many underserved communities. And the other approach that we see as kind of with high potential to provide access to something like CUSD to underserved communities, it's something that we're more interested in, and we're like really actively working on, and this is microloans. So in this model, someone who is already looking for ways to lend money to migrant communities, for example, they can originate a loan in their home country. For example, someone in Mexico, a lending company, can originate a loan there, and this loan can be denominated into USD. So kind of the default currency for the loan, it's CUSD, and so people start using the currency in a way that it was easier for them to onboard, and then apps like Saldo become like this interaction with the legacy world, in which like we take CUSD and then we actually allow them to use it for paying bills and basic things, and even like transferring that to a local bank. Those things require like obviously middlemen, but in some countries it's totally viable to do it, and we believe that that's something interesting for algorithmic stablecoins like CUSD, and that we will see a lot of adoption following that path. The only problem with this model is obviously that there will be kind of a risk of default. So I want to kind of explain what's kind of challenging, but most importantly, it's what is really interesting, and that we see as a potential something that the Celo ecosystem can actually facilitate. This is normally what happens in LATAM or in migrant communities. If you are a lender, you basically will have a 50% default rate. So what it's challenging is if you are the company that originates the loan, you really need to have something to mitigate the risk if you want to serve someone like a migrant worker community that is in a different country, for example. So this is a very challenging problem, and today most of this problem is addressed by I'm going to collect alternative information, like I'm going to see what's in the social media of the person, and what is kind of the data associated to the phone number and email address. The problem with this is that the user never understands what's going on. So in a way, that there's a 50% of people who will pay off the loan, and there's 50% that will default. So nothing changes there. So in a way, I think there's innovation that helps the mitigation of the risk, but we need to see something that actually helps to increase the number of the percentage of people that is not defaulting. So I think the kind of the idea of not telling the person what's going on when they're applying for a loan, I think it's more like, if we want to generate inclusion, we really need to create financial services that are more transparent and that helps people understand what's going on, in order for them to kind of gain access to financial services that so far they haven't been able to have. So again, inspired on the things that we saw in our users, how they interact with different companies. So this, for example, can be a person who created an agreement with a mortgage company in Mexico, and we see how they pay on a monthly basis, and they may also have a relationship with, for example, a cable company. So all these lines represent contracts and agreements that in a way are relationships that were created between a person and a corporation. So we truly believe that there's a lot of ways to leverage this information, because even if you don't have KYC compliant things, like, for example, your passport, if you're a migrant worker, or like a driver's license, you still interact with a bunch of companies, because to survive, you really need to interact with someone who lends you money. So I think a lot of the answer about how the migrant workers in the U.S., for example, can have different types of rates and better loans, it's to really leverage information about the institutions that they interact with, and kind of map them to really create better credit models. So one thing that is well known is that reputation drives cooperative behavior. We saw that in the prisoner's dilemma. So typically, from this 50-50% of default rate, the way to solve it is with iterated games. So if someone actually interacts with someone over and over, so the incentives to default actually decrease. So what it's missing in today's digital financial space is more of this, more ways to build reputation in order to actually have access to better credit systems. So this is the example of the same map of someone having interactions with a mortgage and utility bills and many others. And imagine that one of these, in a way, trust lines is broken. That means that the terms and conditions and the policies that were in place were actually not fulfilled, and the company decides to kick out the person as a customer. So that it's actually it can be very complex, but in a way it's a signal that it's easy to process and understand and map and actually use. So we think that something like this can be like a visualization of someone over the time, how trust lines are created. With for example, this represents the relationships of a person. This is all are from the same person, and over the time, you establish those relationships. And for example, the fifth line, it's broken, so that represented that there was a default in. And you actually don't know anything about the companies and anything about the person. You can actually see kind of the lines, and in a way it can provide a lot of information. And even if you're not a financial service business, you can actually get a lot of insight on what's kind of going on with this individual, and you can take a decision, either take risk, like for example providing a loan. But I really don't want to narrow this only to credit, because I think in order to solve credit, we need to expand our vision and think to how to create like a map that it's general and beyond only the credit system. So the way that we're seeing this happen, and the way like Celo it's fits really well the model, is that Celo has an identity protocol that maps phones with public addresses. And what does that mean is that all this information about the individual, it's actually not the personal information. It's more like it aggregates around a phone number, which is exactly what we're seeing with our users. What it's missing is on the other side. We still need like a tool that maps corporations with public addresses. So this is like digital signatures where corporations can actually start creating or reporting like these trust lines that they create with users in a simple way, but also reliably, that are actually difficult to falsify. And right now in this kind of early stage, and how we do it is like we are starting to see like in domains and email addresses, it's kind of the easiest way to start authenticating and mapping public addresses of corporations with their email addresses. And that helps to create a more robust system to really start mapping the network of relationships, of phone numbers, and how they interact with companies. We really think that something like this can actually start enabling more companies to serve underserved communities by seeing or by having a way to check how were in the past the interactions that this individual that holds this phone number behave. So again, I think that the future is not someone building this protocol. It's more about a consortium. I think the best environment in which something like this can work. The reason being that who is the actual beneficiary of some reputation system like this? Obviously, it can be the loan app. Someone providing, it's their competitive advantage to have this information, but it's really unlikely that other providers will send you information about it. So we really need to create a layer that it's commons, and that means it's public information that never links to personal information, where this map of phone numbers with the relationships with some entities that it's also not public information, actually it's created. And the way that we see this happening in an ecosystem like Celo, it's really interesting, because we really see that so, like a Bitcoin exchange or a wallet or even like a bike service, they all have different levels of trust with their users, but that actually today they don't have any single layer to in any protocol where they can actually deposit data and or get data about specific phone number. This is very maybe more typical in the payment space, where if someone commits fraud, for example, there's a stolen card and someone reports it to like a bureau in which other payment processors can check and see like if this card number has been already reported as a stolen card, then I'm not gonna engage in business with this person who is trying to pay with it. The same thing, it needs to expand beyond the payment system into other things that are actually more trivial, and that helps us create actually in a self-sovereign way reputation that you actually can take control of, and that you can actually take it to somewhere else. So we really see that an ecosystem where everybody uses the same currency and where many entities are interacting with the same smart contract platform, it's kind of the right substrate for this to emerge. Right now, we have a kind of, and all this is not something that our company is focusing on. This is more like things that we see are emerging, and in a way, like we are doing our part to really facilitate or accelerate the emergence of this technology. Right now, we for sure have a kind of, we've explored how the minimum viable protocol for this map of relationships would look like, and it's something super simple. So it's a way for companies to actually try to, request the creation of a trust line with a person, and then a way for them to break the relationship, and a way for the corporation to get information about it. So something as simple as that can be the beginning of these network formation that in a way it's something that today would totally help migrant workers to build reputation on top of, and actually can take control over it, take that reputation to different services, and in a way mitigate the risk for lenders to really give them money or originate loans to this so far risky population. So what we're doing right now as a company is we are definitely providing the infrastructure so that if someone originates a loan denominated in Celo dollars, they can pay for things in Mexico, or engage in contracts with companies in a country like Mexico, and create the infrastructure for those transactions to generate reputation, and using open infrastructure to deposit that data and make it available to other players who serve the same demographic, and that can for sure take advantage of the information, and in a way lower the costs for things like loans to migrant workers. So this is for me the presentation so far, and how we are thinking that Prosperity can can be brought to migrant workers community, and I would love to take any questions if there's time.
Thank you, Marco. It's wonderful. Yes, please, if there's any questions, please ask them in the chat or in the Ask a Questions feature. I want to just comment, it's so interesting how when you delve into kind of the key features of economy, it's really about a relationship, you know, and you mentioned the key pieces of transparency, reputation, and ultimately trust building in creation of financial inclusion. And I just wanted to ask, are there other key pieces that contribute to financial inclusion outside of those three things that we're here that we want to surface?
Yeah, I mean, financial inclusion, it's really a broad topic, and in a way, yeah, it means someone for several reasons is being kept outside of the best, really kind of things that we have in our times. That means that we all sometimes have as a given the easiness of wallets and stuff like that, and credit systems. And honestly, the reality is that these edge populations deal with very, very hard problems. So financial inclusion, it's obviously a way to eliminate the barrier that exists there. And what I would feel like really, I'm really passionate about this, is how, instead of thinking how we all have these better financial systems, how can we really, instead of bringing these edge populations in, no, how can we go out and build better things that works for them, and then expands into what we have? And this is like a radical concept that I think people are, in a way, like not doing it. I see a lot of fintech companies that are trying to, hey, how can we open the doors to our Venmo type of apps to these underserved communities? There's no way. There's so many barriers. We need to think out of the box. We need to go out and we need to build things that actually work in these super crazy environments. And for example, creating a reputation system mapping around zero personal information and interactions that are like fingerprints that now are digital. I think if that we can make it work under those very hard circumstances, then we can easily make it work inside of the other system, and that can transform. And that can actually break the barrier that today separates kind of the excluded from the included.
Mm-hmm. It's a great point. So we have a few questions here. Angelica asks, how do you reach your target users?
Actually, like, there's no secret sauce in there. Actually, it was kind of a surprise for us how cheap the customer acquisition was. And again, this is because we're like serving populations that have very fundamental needs, like, hey, paying your electric bill or your phone company. So it's Google and Facebook are actually like a way to really cheaply acquire users for us. But again, I think for a lender, that's not the case. It's like super expensive for a lender to acquire customers. You're speaking dozens, if not hundreds of dollars for them to acquire a good borrower. And I think that's where it's become interesting. If a service like Saldo can generate information that it's available for other lending companies, then the customer acquisition cost will go down, and that will dramatically help them to serve more customers at better rates. So instead of looking at lending as, okay, this is predatory lending, this is not. I mean, again, this is very tough. I've talked to several lending companies that say, I cannot sustain a business if I don't charge these crazy rates, because half of my people are defaulting. So I think that it's not that they're predatory, and the bad way to look at it is like, hey, these are sharks, and this is not a moral thing. This is just economics and how the world works. So we need to build a system that incentivizes people not to default. And in a way, like, we as humans, so far, it was not possible to build something digitally. Now people are starting to feel more comfortable having digital assets only in digital form. And I think that what it's missing, it's a way, and this is not technological, this is more like something like an artist should come up with an idea on how to represent this karma that you're building in your digital persona, and actually take care of it. And in the same way that you take care of a plant, you should take care of your reputation in a way, because it will help you to unlock other services. And this can be gamified, and this should be gamified, so that people feel actually comfortable and engaged with services, and actually can feel that they control and they own something, and they can take it anywhere in the world, and that they actually will benefit from it. And that's kind of what we think. It's a totally possible thing to build on top of all these technologies, and then we would love to see, especially when there's a consortium of companies really aligned with this mission.
Great. And another question we have: what's the response or perceived sentiment from financial institutions and regulators towards these types of innovations?
Well, I think in general, if you lower the risk for in general for everybody, this will like win. In a way, like regulators in general want to lower the risk, and many of the regulations is to actually prevent people from losing money. So again, if there's a way to help everyone to be safer and better off, I think ultimately the regulators will want to see it, will want to learn about it, and this takes time. But it's not about regulation; it's more about like making thing work, and then eventually educate better to the policymakers.
Thank you. So I just want to allow another minute here if you have any other questions for Marco. And following this, we will move into a Zoom chat so that we can meet each other face to face, and you can meet not only Marco but also others that have been on this call. So it's our way of connecting as a community during this time of COVID. Online is a great way to meet community members. Okay. So with that, Marco, thank you so much for joining us today. This is a really beautiful presentation. I love what Saldo is doing. It's really on the cutting edge, and I love that that we can support it. So thank you and the team. And also thanks everyone here on the call for joining today. Please, if you want to stay in touch with the conversation in general of building prosperity for all, join our Discord channel. There's a link here down at the bottom. And next week, we will be connecting around international health and how international health and crypto can work together to create prosperity. And that event link will be up shortly. I'll send that out to everyone. So may all beings prosper in their connection and unique purpose. And I'll be sharing the Zoom link shortly in the chat for those that want to connect. So thank you, everybody.
Thank you.